Good evening, traders and investors. Will back here with another one, coming to you with a Friday and weekly market recap. Hopefully you guys had a very good day in the markets on Friday. And since I'm filming this one very late on a Saturday evening, hopefully you guys are having a very nice start to the weekend as well. Now in Friday's action, we had the SPY and the QQQs closing at brand new all-time highs. Decent week in the markets. It was a very volatile week in the markets, but culminated in some brand new all-time highs. And of course, a lot of the reason for the bullishness on the Friday close was because of the CPI report that came in very early Friday morning, in which we saw the CPI come in slightly under the expectations. The expectations were for 3.1 year over year, and we came in at 3%. Now, 3% is arguably not the best number, but it did come in below the estimates, and that was enough for the bulls to really push us higher, as now the rate cut probabilities for next week's meeting with Jerome Powell stand still at 98%. So that CPI report did nothing in terms of deterring the market's expectations of a further interest rate cut. Now, last week was very volatile, but I hope you guys are ready for an even more volatile week coming up this one. Of course, it's the biggest week of earnings that we possibly have. Everything from SOFI, from Meta, Microsoft, all the big tech names, Amazon, Apple as well, and Google, and a whole host of other fan favorite technology names will be coming into play over the course of this week. But not only that, guys, it's a very busy week for macroeconomic details as well. You can see that here on Wednesday, we get the infamous rate cut decision by Jerome Powell. The consensus, as we said previously, is for 0.25% in terms of an interest rate cut. We have one right now and possibly one in December as well. However, the big part of that meeting is not necessarily going to be the number itself, but rather Jerome Powell's commentary on the direction of the economy, the direction of future interest rate cuts, and also labor and inflation. Those are going to be two things that people are paying very, very close attention to overall. That's going to be a busy piece of news on the Wednesday session. Thereafter, we get GDP on Thursday to ramp up things even more, and Friday, culmination with the PCE inflation read as well. So two inflation reports, one GDP report, one meeting with Jerome Powell, and of course, some very big meetings with President Donald Trump, currently in Asia, doing a bit of a tour right now, starting in Malaysia, thereafter going to Japan, and then finally South Korea on October 30th, which is Thursday, for the infamous meeting between him and President Xi Jinping of China for trade discussions and everything of that nature. So we're going to get hit all across the board this week, guys. You're going to have Trump headlines, you're going to have Jerome Powell headlines, you're going to have macroeconomic headlines, and you're going to have a massive earnings headlines as well. So hopefully all you guys are ready, and we'll be here every day on the channel to recap all the action for you guys. So in today's video, guys, quite simply, we're going to go through a few things together. Number one, we're going to recap the CPI details. What happened on Friday? Why did the market like it? Is there currently any problems to look out for in terms of the inflation front? Thereafter, we will get directly into our technical analysis. Not going to cover any earnings today. We'll save all that good stuff for next week. So we'll just be jumping into the technical analysis portion of the video, all of your major index rundowns. Thereafter, we will take a look at our big tech list as well and see which of these companies are well positioned into their earnings. Can we derive any possible swing trades for them? And can we also ascertain whether or not some of these businesses are good investments right now for long-term portfolios prior to their earnings releases next week? Thereafter, guys, we will take a look very briefly at our biggest gainers and losers of the week, of which, as always, there were many to the downside, which we'll take a look at, and also many to the upside. You can see here a lot of the names that got beaten down really hard over the past few weeks, coming roaring back in the past two trading days. So we will take a look at some of those names as well, derive any possible swing trade opportunities or long-term investment potential. And lastly, but not least, we'll be taking a look at my portfolio for a few trades that we concluded last week profitably. You'll see here that we had a very good week in terms of the wheel, a very good week in terms of managing our assignments with some extremely juicy covered calls, and even we're able to close out one leap call contract for a very solid amount of profit here on healthcare. So we'll be recapping last week's trades, and also I'll show you guys which trades that I have into next week's very volatile action as well. So that's going to be it for today's video. Let's jump right into the action, shall we? So last week on Friday, the SPY closing up 0.82, the Qs closing up 1.07, and the market breadth overall was very healthy. Take a look at the heat map right here. Most of all your big tech names were performing really well. Shout out to semiconductors, a lot of the bigger players there having a fantastic day on Friday. Only really Tesla and Netflix getting left behind a little bit. In terms of your big tech names, financials, very nice performance by financials on the Friday session. Not many niches within financials getting left behind. It was a very nice day of broad market performance there. Healthcare, a little bit soft. Healthcare had a pretty good week, but wasn't able to wrap it up with a big green day on Friday. But still, sector is recovering very nicely. And last but not least, the bottom half of the market, that was relatively mixed. Consumer defensives, still one of your softest performing sectors on the year. The bottom half of the market here, your interest rate sensitive names, a bit down just because on Friday we have a bit of an upswing on yields. Wouldn't look too much into it, guys. There is still some fantastic opportunities in the bottom half of the market, namely a lot of utilities plays, which we'll talk about a bit today as well. Of course, having to do with the energy providers for all the data centers that are getting built across the nation. Moving on to the one-day relative performance, you can see even better the sector rundown. Technology running ahead here. First position, utilities, communication services, financials following closely. And to the downside, sadly, defensives and energy. On a 1 week relative performance basis, most of the market was in the green. Only basic materials, defensives, and utilities lagging a little bit behind. But we had a lot more sectors in the green and big green, especially technology up there, 2.5%, looking quite solid to wrap off the week. In terms of our fear and greed index, somehow we are still in the midst of a fearful environment for the markets, possibly because of all the growth sell-offs recently and a bit of uncertainty leading into, the last 2 weeks of trade, especially with the China tariff narrative, et cetera, et cetera, et cetera, and a bit of the breadth decline that we saw thereafter. In terms of your breadth indicators, guys, they're not too bad overall. Percentage of stocks above their 50-day EMA in the S&P 500 now creeping back above the 50% mark at 56.15, but this is why the market was fearful recently. The breadth, especially on the short term, really fell off a cliff, but it's recovering a little bit right now. In terms of your percentage of stocks above your 50-day EMA, which is the institutional preferred moving average, currently sitting at 52.39. Not too bad, not as good as where we were earlier in September, but definitely off the lows of the China fear cycle in terms of tariffs a few weeks ago. And lastly but not least, the percentage of stocks above their 200-day EMA, that's actually doing quite well at about 60%, which is relatively close to the highs of September. So what can you derive from all these various moving averages, right? All these indicators? Well, you can just derive quite simply that in the past few weeks, a lot of stocks, most of the market actually, had a very steep and sharp pullback from their all-time high levels or from some of their local high levels. The short-term breadth on the 20 and the 50 was quite soft. You saw some pretty big sell-offs across the board depending on what you were invested in. However, did they come down and crack their long-term moving averages? The answer is no. The market is still healthy there. So the market still retains its longer-term bullish bias characteristics. But in the short term, it was a bit of a volatile consolidation period. Of course, we saw the VIX upswinging as well. So before we get into more technical analysis, guys, let's do a very brief rundown of the CPI report on Friday. As we said previously, right, they came in at 3% versus the 3.1 expected. Month over month, 0.3 versus 0.4. That was a very nice read as well. And core also beat on both the estimates, both on the month over month and year over year. Both of those estimates coming in a little bit softer than expected. Special shout out though to manufacturing and services PMI. Those show that the economy is recovering from some of the soft numbers that we received earlier this summer. So those are also pretty bullish points that added to the bullish bias on the Friday session. That being said, if we move into the CPI report, inflation hit 3% in September, lower than expected, as the long-awaited CPI report showed. Let's move into a bit of the reasoning behind the beat. A 4.1% jump in gasoline prices was the largest contributor to a report that otherwise showed inflation pressures fairly muted. So gasoline, surprisingly enough, adding to the CPI report, it was your biggest contributor. Shelter costs, which comprise about 1/3 of the weighting of the CPI, rose only 2.2% and were up 3.6% from a year ago. We will do the breakdown by category, and I'll show you why shelter matters a whole lot. It's been one of your stickier components of inflation. Here's what one analyst had to say. Inflation might not be slowing, but it's not surprising to the upside anymore. And I think this pretty much sums up where we are in terms of inflation, and Jerome Powell has said the same thing in the last 3 times that he's spoken to the markets as well. There are signs of a strong substitution effect already coming through. U.S. companies switching to lower tariff countries for their product sourcing, with the composition of imports shifting. So the companies doing the best that they can to mitigate the impact of tariffs, which is possibly why you're also not seeing crazy upswings in prices to the consumer. Have things towards the consumer come up slightly? Yes, but exponentially? The answer would be no. The result is companies are better able to absorb these more modest than feared cost increases, and there has been less impact on inflation than predicted so far. In time, we expect the realized tariff rate to rise and goods prices to be more heavily impacted. But we continue to argue that tariffs will be a one-off step change in prices rather than something that will lead to more persistent inflation, which is exactly the stance that the Federal Reserve has taken as well. I'll remind you, the summary of economic projections released in September by the Federal Reserve saw upticks in forecasts to inflation, about 3% in 2025 as measured by PCE, and thereafter in 26 and 27 coming down. And Jerome Powell has been very clear on the fact that they too believe that the inflation resulting from tariffs would be a one-time increase. And then, as the article just said, the substitution effects are going to kick in and we will be able to absorb those impacts a little bit better. Now, I will remind you guys in terms of this CPI, right? Don't forget, 30% of the CPI is now being imputed, meaning it's being guesstimated, right? And that's because there's a lot less federal workers to go out there and kind of measure prices on a month-over-month basis, which is why I prefer using the Truflation Index. This actually tracks 15 million plus products on a daily basis measured by SKU. Of those 15 million different products, guys, you have over 30 million different price points because obviously some of those products come in different sizes. So many different price points, it does represent, in my opinion, a more accurate measure of the true inflation that's currently in the economy right now. And you can see it's about a 2.32%. It's oscillated up and down since the month of July, but we are nowhere close to the actual 3% read that the CPI would show. And of course, this one does represent everything from goods, services, shelter, and all that good stuff as well. If you take a look at the CPI drill down here, you'll see that the all items number crept up to 3% in September, which is a similar read that we got back in January. Is it exploding to the upside and surprising just as it did a few years ago? No. But is it relatively sticky between 2 and 3%? The answer would be yes. If you want to drill down by items, you can see that food has been increasing somewhat steadily here over the past 3 to 6 months, from the low ones down to about 2.7. Is it problematic? I wouldn't assume so, because you can see several instances here in prior years, especially ones that didn't have any impacts of tariffs whatsoever, where food inflation was kind of higher than it was right now. So I would say we're still within the confines of historical norms, although it is higher than earlier this year. Energy prices upswinging, but don't forget, they were under zero. They were actually deflating, and now we're at 2.8%, which is higher than we did have a few months ago. But in terms of your historical averages over the past 20 years, I don't see that there's much of an anomaly right here. In terms of apparel, right, subject to tariffs a lot, take a look at apparel, minus 0.1%. So clear substitution effects are visible right there. Definitely not as high as we had in 2022. And I would say that roughly we are in line with some of your historical averages over the last 20 years as well. Shelter, one of your more sticky inflation components. You can see that that is now finally in the mid 3% range. This one was one of your more stickier inflation components. And as the article says, it does represent 1/3 of your CPI read. So it's nice to see that shelter costs are on their way down, steadily on their way down, but not anything rapid. Of course, if you take a look at just normal food, right, just the price of groceries, 3.1%, is it in line with our historical average or median? I would say so, but you would like to see this one stop upswinging in the near-term future. And lastly, if you take a look at one last one, services, less energy services. This does comprise a bit of shelter services as well, 3.5%. And I'll remind you, this one was also extremely sticky, but now trending nicely to the downside. So overall, not a very bad CPI report. Some things upswinging, but upswinging from deflationary territory, right? You can think about, things like energy, right? They were under zero, now coming back higher. And other more stickier components like shelter continue to trend down. So very average report. Nothing big, but the markets did really appreciate that one. And that is everything for your CPI analysis. Hopefully you guys enjoyed that. In terms of my final say on inflation, guys, I would kind of side with the Fed to where these increases from tariffs will probably be one-offs. Of course, those tariff rates can be negotiated down in the future, but we will have some headline risk over the course of the week, especially with Trump's meeting with a lot of Asian leaders. You're going to keep an eye on what possible tariff talks can come out of the meetings with Japan, but also especially with China on the Thursday session, so keep that in mind. Now let's dive into some charts right now because we don't have any earnings to go over. So if you take a look at your indexes, we will notice that in terms of the SPY, guys, the bulls are still in absolute full control of these charts. Beautiful daily uptrend from those China tariff fear lows, and now cracking above our all-time high resistance range with a little bit of a gap up open. The line in the sand is 663.89 because if you come down and crack that, your daily uptrend is lost. But it's nice now that we broke through all-time high resistance because the bulls will be able to use that as support. Roughly, let's call it 674 down to about 668 is your support under the market right now. The S&P right now is up 14.91% year to date. And of course, a lot of analyst price targets, shout out to Tom Lee as well, are up here at about 700 for the S&P by year end. We will see if we can actually get there. If we miss it, if we go above it, but on the channel, you guys know, no use of predicting things. We'll just take it one day at a time, one earnings report at a time. I largely believe that any follow through here will be predicated on the possible bullish releases of these earnings, of course, right? If any of these big weights in the index miss, or for some which reason they show good earnings, but the market sends them down anyways, just like Netflix, well, you can expect a bit of a retracement on the S&P. So just keep that in mind for this week. You have a gap, the bulls are in control, but do not get complacent and do not get too greedy as well. I know it's very easy to get greedy in this market right now, but you always have to come back to your first principles trading and investing, right? Never get too greedy. That being said, the weekly bulls are in full control and tons of space above our weekly higher lows, 651. The reason I bring up the weekly charts all the time, guys, is because when you lose them, that's when you usually go into extended monthly consolidation. And that's when you have to play defensively for weeks and weeks on end, not just for 1 or 2 days of big volatility. Moving on to the QQQs right now, same concept. Daily bulls are in full control of this chart. Line in the sand, 600. That is your daily higher low, and now nicely above our resistance all-time highs. 611 down to about 607.50 is going to be your key support range. The 12 EMA is down there as well. So the bulls are working with a decent amount of space right now on the daily and especially on the weekly charts as well. Your weekly higher lows are the lows of the China fear trade right now. Beautiful weekly uptrend. The bulls are just continuing with some very nice momentum. But don't forget, right? The monthlies are getting quite extended on the SPY and the QQQs from their 12 EMA. Can this run keep going? Of course it can keep going, right? But when you start getting into monthly overbought conditions on the SPY and the QQQ, you really have to pay attention to any of the possible bearish catalysts that can come into the market, because some of these can derail the market, as I was saying, for more than 1 day at a time, talking about big weekly consolidation or even big monthly consolidation. I'm sure a lot of you are looking for that, right? And maybe you guys have been trying to predict when that's going to happen. Don't try to predict things, guys. Just react to the price action, right? If you lose your weekly timeframes, that's when you can say, okay, this time is different. We might just be looking for more extended weekly consolidation that can last more, as I said, than a few days at a time. But as long as these daily bulls are in control of these time frames, we can't just sit here and keep trying to pick tops and keep trying to pick short the tops or build a huge cash position and say the markets are going to crash soon. That's kind of not how it works, right? You got to wait for the markets to show you. There has to be a big catalyst at play. Moving on to financials right now, financials able to recapture the daily uptrend. We are moving into resistance, 53.31 down to 52.88. Not too bad of a resistance range, right? Prior all-time highs, big support. Now the bulls are trying to make their way through there again. We'll see what happens because the bears have controlled this daily downtrend for about a month and a half. So now there is a shift in price action structure. The daily MACD appears to be curling around after spending 1 month in the bearish camp right now, not looking too bad. And in terms of the weekly, guys, well, you guys know the drill, right? We were always looking for a nice backtest of support, 52 down to 50, and that was even more apparent on the monthly timeframes, looking for some monthly higher lows for further trend continuation. I've been very clear on which names I preferred in financials. Names like JP Morgan going for weekly uptrend continuation patterns. Goldman Sachs, same concept. They're already doing it, reacting perfectly from our entry levels down there. And even some names like Visa that have been consolidating now for 6-7 months in a row. Beautiful monthly consolidation pattern, monthly bull flag in my opinion. Looking for possible further upside, and special shout out to other companies within the financial niche, such as SPGI down here, 480 to 455. A beautiful entry area, in my opinion, for some swing trade longs or some longer term positions. And even Moody's. We were talking about the same type of trade on Moody's. When it was down here, we covered their earnings on the channel last week. They had really, really strong earnings. And this one, as I was saying, after their earnings, very rare to find this one under a 30 price to earnings. I know they're not the sexiest names. I know they're not the fastest movers, but they are very strong companies with very strong balance sheets and extremely wide moats as well. So maybe that style of company is something that you might enjoy. On to healthcare right now. Healthcare making its way into resistance again. 148 down about 145 is the resistance range. The bulls are looking nice right now. Any move lower off of any rejection from here, looking for a higher low. Anything above 141.30, looking for the higher low for possible further trend continuation if they cannot get it done in one single leg of price action. That being said, the weeklies are not looking too bad at all. The weekly candle closing into resistance, and you might need to see the bulls push a little bit further here and try for the break. Now, that being said, if they don't get it done, you can still have a very healthy pullback for some repositioning, but I would like to see the bulls this week smash through resistance, give me the breakout, the retest, and then we can possibly look for some more swing trade longs, because you guys know I've been having swing trade longs from the bottoms. This is take profit area for me, number one. If we do revisit lower, I'll be a big fan of looking at that trade again. But as of right now, I'm kind of locked in for some positions. Special shout out to Eli Lilly. Eli Lilly probably has one of the best swing trade patterns that I've seen from a lot of healthcare stocks right there, breaking above our downtrending channel, backtesting it in the context of a nice weekly uptrend. Could just be due for a little bit of a monthly push after consolidating now for a very long time. Eli Lilly does not look too bad at all. Not too bad for a swing trade, in my opinion. Moving on to SMH right now. SMH breaking above the new all-time highs, right? Now sending a gap just like the SPY and the QQQ, and your daily higher lows are right there. Finally getting the daily uptrend back. So your line in the sand is 332.70. Pay attention to that one, because if you lose it, that's it for the daily uptrend, and that might be synonymous with a bit of a weekly consolidation phase in the markets right now. But as of right now, we are just not seeing it. Semiconductors remain excessively strong in spite of being in overbought conditions. So just pay attention. If you guys are trading semiconductors, right? Especially the ones that are really, really hot right now, such as Micron, such as AMD, such as other ones like ASML or LRCX type of thing, right? It's fine if you're in them already, but in my opinion, positioning up here without a stop loss below some of your more recent daily higher lows is somewhat of a risky proposition, because they have ran a lot. A lot of these names are in weekly overbought conditions, and it only takes one big piece of news to kind of unwind a lot of that bullishness, a lot of the positivity. However, if we're in for a long-term thesis from some of the levels that we were pointing out earlier this year, I don't see a reason to sell any long-term shares. It's just for those of you that enjoy swing trading these, right? With the momentum, with the volatility, just make sure you're establishing stop losses below those daily higher lows. That's the way to properly play momentum and avoid getting trapped in some very large weekly consolidation if it does happen. As of right now, it's looking good, right? But you always have to manage the risk. Moving on to the IWM Russell right now. So growth stocks, not a terrible day, but we know the price action on these has been kind of all over the place, right? The bulls trying to go for the daily uptrend break, but no new all-time highs. That being said, not looking too bad on the Russell here, guys. Although the price action is somewhat awkward. I keep saying it, right? The time, or rather the way to position in the Russell, is a two-step procedure. Yes, we can take some longs from here if your investment thesis is 2026, 2027 expansion of the sector, but just keep in mind, right? This segment of the market has ran very hot for the last 7 months, just like kind of the rest of the market, right? If you get a big market-wide pullback, we are clearly going back down here, 230 to 224, so we should leave some capital open to DCA any trades that we take up here. So this is a bit of a I wouldn't say it's an awkward trade, right? But it's a bit of a head scratcher, because everybody's going to be saying, is it too late? Too late depends on your time frame always, right? Too late in the context of a 2026, 27, 2028 growth expansion with interest rates being cut, no, you're not late. Arguably, you're at the first stage of this, right? But late in terms of short-term price action, sure, you're not getting the best entry as some people got, let's say, back here on this back test, but still, it is worth a shot. Just have some money to kind of DCA on the dips. That is my opinion there. Moving on to some of our more minor sectors, health, consumer defensives right now, still soft. If it does come back down here, it could be a nice swing trade opportunity, just as it was the last time that it kind of entered that position. But some of the value names really not getting much love at all because a lot of the attention is in growth right now. You'll see these flare up when you get high VIX and China tensions and bearish narratives. But when those kind of go away, well, this one just remains very soft. So I am a fan of playing this one with the wheel strategy, but I'll be patient for it to kind of come back down here, 77, 76. Utilities. Utilities is a very solid place to be, right? Very nice weekly uptrend. Not yet back testing the 12 EMA, but you know, you can see here the bears had it in motion. Whether or not they can get the follow through to the 12 and a prior resistance, which is support, is a different question, right? But utilities are looking very strong, depending which names you're looking at. Some of my favorite ones, Next Era Energy. This is kind of crazy. Looking for possible inverse head and shoulders on the monthly time frames. That took like 3 years to form almost. It's very massive, looking pretty good. The first time we talked about this company was down here. Another one of my favorite players in utilities right now is Vistra. Solid. They've been accumulating the levels. A lot of us were able to write some short puts down there and or accumulate some longs. Longs down into probably like the 160s is very attractive. But even from here, guys, right? If we're going for the expansion of the thesis, fundamentals wise, right? Not terrible to be accumulating positions on the way down through the monthly downswing and looking to ride them into 2026, 2027, and beyond. These data centers are going to need some power. And when you're talking about power, you want to go to some of the more established players to build a base around those companies. And then you can include some speculative bets, right? But when I'm looking to build out a niche of my portfolio for, let's say, the power requirements of data centers, right? There's many ways to do it, but I like to put a bulk of the capital into well-established players with solid revenues and solid growth. And then I'll take some speculative bets here and there. That's how I structure niche trades sometimes onto real estate right now. Real estate, pretty good. We've been talking about this range of consolidation pretty much all summer, right? Down here, 41.5 down about 39. Real estate is not looking bad. Whether you look at this one, where you look at XHB, which is the home builders ETF for a bit of follow through, these names are not the sexiest names. They don't move the fastest, but they do have big macro tailwinds in respect to rate cuts as well, right? So whether you're looking at the home builders, whether you're looking at the Rocket Mortgage, or rather mortgage companies in general, we are looking for extension of the monthly time frame. So as I say, on all these slower trades, guys, I'm not looking for this in the next 2 weeks, right? It's not going to be Palantir. However, are they nice niche trades that we can kind of carry into the next 3, 6, 9, 12 months with a macro tailwind thesis? Well, the answer indeed is yes. That's everything for most of your sector rundown. Hopefully you guys enjoyed. In terms of the VIX right now, the VIX back down to 16, basically unwinding the entire China volatility narrative overall. However, pay attention though, this week you have more than one VIX catalyst, all the earnings, all the Trump meetings, Jerome Powell, GDP, right? The inflation prints as well. So keep that in mind. You got a lot of volatility catalysts. So I wouldn't say that the VIX is done for just yet. If any of those pieces of news come out the wrong way, well, we will have a nice upswing in volatility. And you guys know me, while the volatility is high, I enjoy selling options in the market. And if the volatility just makes its way to the downside, to the lows again, I'll do the same thing that I was doing back here, which is looking for leap call contracts on some names that have not ran as much as maybe some sector peers, or maybe just some names that are lagging behind the market overall with low volatility that I can substitute some shares for some leap call options and go for some upside. In terms of your yields right now, yields are not really doing anything, but you can see here, right? Bit of an upswing into Thursday and Friday on the yields. However, the trend is quite clear on the 10, nice downtrending nature right there. And on the 20-year yields, same thing, right? Nice downtrending nature to them as well. You're going to get probably a rate cut over the course of this week, and that probably will push yields a bit further to the downside. However, it will not be anything fast. Bonds were a decent trade down here. Now you're kind of midway through the trade because we know a lot of this stuff moves with the short-term yields, and then whatever action happens on the short-term yields eventually carries into your longer term yields. The longer term yields also hold some risk premium in terms of people's stance on the stability of the US dollar, people's stance on US exceptionalism, people's stance on the amount of debt that the US government holds as well. So those are the risk premiums involved in the 10 and 20, which is why they don't respond as quickly to changes in your short-term interest rates, which is why, right, the bonds, especially longer duration bonds, have not done so well recently. There's still a big cohort of people that just don't trust either the US dollar or the US debt levels as well, which is why you've been seeing a lot of action into the next asset right here, which is gold, right? A lot of central banks swapping out their US dollar denominated bonds for gold. They've been accumulating gold, especially China, Japan, Russia, right? A lot of countries now accumulating gold and sent this asset absolutely flying from August all the way through just about a week ago on gold right now. Speaking about gold, well, we were commenting on the fact that this was a very healthy daily uptrend, but now the retracement size was quite large. Usually when you have such a large retracement size, it is very difficult for the bulls to just act as if it never happened and V-shape an 80% retracement. A lot of the times they'll have to do it in 2 steps because they just won't have the juice to get it done in 1. Or a lot of the other times as well, especially with such a deep cut, you might just be looking for the lower high into lower low, daily downtrend into a bit more weekly consolidation, maybe around to the 12 EMA, about $3,800. Now, there is one swing trade for those of you that are not faint at heart pretty much, right? The swing trade is for bullish continuation. Now that we've established a bit of a local bottom, it's a tradable bottom. That being said, right, you had the 4-hour downtrend. They stopped it. Now you're looking for the higher low and now possibly the higher high, right? So that is a speculation trade. However, the risk reward is not that bad. If we're looking for the speculation trade for bullish continuation using the monthly and weekly timeframes as a long bias, this would be the trade structure. Your stop loss would have to go below this guy right here, below 4,000. Why? Well, because if that flushes, right, your entire trade thesis is invalidated. It's a daily downtrend, and you will be going for a sharper retracement to the downside. However, if you want to play this one, right, the trade thesis is very clear. Stop below there, going towards the highs. That's for those of you that really want to play gold a little bit aggressively and try your hand at this swing trade that can make sense just because the weekly bulls are still massively in control and you really don't know, right? Can they bring back in the huge levels of buying and push this even further? Of course they can. It's all about risk to reward, right? Forget about predicting. It's all about, can we find high risk to reward trades? And in this case, the answer is, yeah, it's decent. It's above a 2-to-1, right? Moving on to our next level of assets right here, which is going to be Bitcoin and Ethereum. So Bitcoin, not a terrible showing towards the end of the week. The bulls are still trying to recapture this daily uptrend. You will need to breach above 114,000 to really cement that as a new daily uptrend, the end of your weekly consolidation, and look to really push beyond resistance up here, 119 to 114. Obviously, Bitcoin has been a little bit soft recently, and you can see it best on the monthly timeframes. It's just been monthly consolidation, right? Unable to close too much above here, the 125,000 level, and able to sustain the breakout. Bitcoin's done this several times in recent history. They just move very, very aggressively and then consolidate for a couple months at a time. The way that I'm playing this is accumulating Bitcoin and or Bitcoin proxy positions like MSTR or whatever your favorite treasury is down here, 107 to 100 in the support range. And I'm having a lot of fun selling some put options on some of those Bitcoin proxy plays as well. But I'm also building a bit of a long biased swing trade position here using some call options, which I'll show you guys at the end of the video. Of course, not looking too bad, but still kind of trendless on the medium term weekly timeframes. Ethereum, kind of the same thing, right? The bulls are trying to protect this whole 4,000 to 3,700 level. Not too bad. Equal lows. If you want the daily bulls to be back in control, need to break above 4,100. That's a new daily uptrend, and that will be the end of this phase of weekly consolidation. But the weekly bulls have a lot of work to do, man. It's a weekly downtrend, right? They're going to need to reset this weekly eventually too. And you know, when you're in the context of a weekly downtrend, it's just monthly consolidation. It does look very attractive, though. I would be still keen on positioning for some Ethereum here. And if it breaks lower, you have to have some money to accumulate down there as well for the full retracement size on this monthly move. You would like to believe, guys, that this is your local bottom and we're just going long from here. but it's anybody's guess, right? It's highly dependent on the overall status of the markets, as we know that crypto has been largely moving more in line with the S&P and the QQQs. If the SPY and QQQ have a big 10% correction, do you guys really think Ethereum is going to blast off? No, but if the SPY and QQQ continue gaining levels, we get good earnings, well, that bullishness will carry into other assets and then probably also carry into the Ethereum trade. So I am playing some names down here. My favorite name that I'm playing all the time and even accumulating a tiny bit of positions here is BMNR. That's probably my favorite Ethereum proxy play if I'm not just buying Ethereum straight out. That's everything for your overall market rundown, guys. Hopefully you enjoyed. Now, let's dive into some big tech names, shall we? So Apple on the Friday session, nice 1.25% move, very close to the all-time highs. But of course, we know that the price action in the short term probably doesn't matter because Apple has earnings coming up in just about 4 days' time. I'll show you guys the expected move. I'll be bringing up this every single day of the week, pretty much. The expected move on Apple is for the week. Let's take a look right here. It's going to be 3.5%. So 3.5% to the upside from here, obviously brand new all-time highs and daily uptrend continuation. 3.5% to the downside just means that you're going to revisit probably some of your daily lows, big daily lows, and also the weekly higher lows as well. Now, in terms of the chart looks great for some further expansion of Apple. But as I said, that further expansion is going to be predicated on a good earnings release from the company. I do expect them to have good numbers. I do expect them to have sustained bullish revenue pushes as well. Last quarter, we got the best quarter since December of 2021 on that revenue print. A big focus, of course, is going to be on the iPhones. We know that Apple has had a tremendous release for the iPhone 17. iPhone 17 Air is sold out all across China, and most iPhone 17 models are currently still sold out and on back order for about 3-4 weeks of time. So they should be able to provide very decent guidance, but we'll see what happens with this company. No swing trades for me, and also positioning on Apple up here at the all-time highs. It is quite expensive. The time to buy Apple was really down here. You know, there's times to buy things and times to kind of hold off. And right now it's just a bit of a hold off period for me on Apple. Moving on to AMD right now. AMD up 7.63% on the Friday session. After this piece of news right here, AMD stock pops nearly 8% on report that IBM can use its chips for quantum computing error corrections. Very solid piece of news that led AMD to be higher, and it also led IBM to have a very strong day on Friday, almost up 8%, them two respectively. So AMD, man, really getting the pieces of the puzzle together. Nobody was expecting this quantum news at all. A lot of the focus has been on their ramp up in terms of data centers, or rather data center partnerships with a lot of the big tech names, partnership with OpenAI, of course, for a stake in equity of the company, which propulsed the stock from like the 170s all the way up here to like 220 in one single day. And now it's just off to the races for AMD. So AMD price action, still very solid. Earnings coming up in about 2 weeks' time. Daily uptrend, still to the bulls. They almost lost it. No candle closes below. So the daily higher lows right now are still set right down here at about 228. Creating a lot of space right now. Daily, not so overbought, could be due for one leg higher, guys. And now, since it's a blue sky breakout, you just got to go with round psychological numbers, 275 and then 300. That being said, on the weeklies looking phenomenal for some breakouts, guys. Is it a good time to buy AMD up here at 250, currently trading at a 2 peg? Well, it's not the best time. However, with a long enough time horizon like 2027, 2028, 2029, it still does make sense. I do believe that there's a good possibility that AMD can still have like a 50% to 100% upside from here with a long enough time horizon, guys. You're going to have to wait, right, for these revenues and for these margins to come into play, as right now the stock is running on hype, it's running on momentum, but hasn't fully realized a lot of the money that it's going to be coming in the next few years. So short-term swing trades on AMD, probably a very risky and volatile proposition. Long-term positions on AMD, still decent. Of course, you guys are not going to get the best compound annual growth rates, such as some of us got, but still, is there juice left in the tank for AMD over the next couple of years? I think the answer is a pretty clear yes. Moving on to Amazon right now. Amazon up a 1.4%. Now, the price action on this one probably won't matter at all because, of course, they have earnings coming up this week. Take a look at earnings estimates for Amazon in terms of the price movements. You'll see that the expected move is about 5.72%. Let's call it about 6%. So 6% to the upside, and you're kind of right back here, close to all-time high 240s, and 6% to the downside, you're right back down here into support. You guys obviously know the drill. If Amazon comes down after earnings, like they did back here, I will be a firm buyer of the company, especially into this nice support area. If it just pops after, will I be buying up here at 240? Maybe some nibbles, but not too heavy. I have been buying Amazon a lot down here, building some leap call positions, playing the wheel on it a lot. But if they really break out, like they get a 10% earnings quarter and break out beyond the all-time highs, I'm pretty much full. I wouldn't mind just not buying Amazon anymore, but if they come down, I definitely will not hesitate to buy a little bit more. That being said, this quarter, guys, is all going to be on AWS. It's entirely going to revolve around AWS because that's been one of the reasons that they've been performing very softly recently. People are concerned that they're not growing as fast as Google or Microsoft in that aspect. So pay special attention to Amazon's AWS segment. Even though the rest of their business is doing fine, this has been the one thing holding back that big share price appreciation. Moving on to Google right now. Google, very solid breakout from the all-time highs, looking very strong, man. 2.7% to the upside. What a recovery story by Google, obviously. I kept talking about it this entire year so far, even up to like $200, man. The stock was trading under a 20 forward price to earnings. And at the all-time highs right now, it's not even that rich, right? We're trading at a forward 26 forward price to earnings and a 1.73 peg. So Google's valuation is still arguably attractive even at these levels. Now, I know you look at this chart, you say, I can't possibly buy Google up here. If you're a long-term investor, you can. If you're a short-term swing trader, that's probably when you would have a little bit of pause. That being said, the daily uptrend is very nice right now, but as we know, price action is probably meaningless because Google has earnings coming up this week. A big emphasis, of course, is going to be on their search business. Is it being disrupted by ChatGPT? Is it not? I guess we'll have to find out in this week's release. The stock is expected to move about 6% either direction. If Google comes down after earnings with some good volatility, back down to like 240, then we can possibly play it again and maybe even find some short put opportunities a lot lower with some good volatility. And if it just breaks out to the upside, guys, I'm full on Google. I spent like a year of time, well, not a year, like 6 to 7 months, really harping on this stock and really saying it was one of the best opportunities in the market. So if Google just pulls up further, I don't mind at all. I'm pretty full on this company. On to Meta right now. Meta, same concept. They have earnings this week, right? So although the chart is not looking too bad, daily uptrend formation. The weekly has been a weekly downtrend as well, reacting nicely from support 705 down to 680. The stock has earnings this week, so any short-term price action will be meaningless because the stock is probably going to move 6%. You can see here, 6% is the expected move. So 6% on Meta, right? If you get a downside move right here, back into support, I will be buying Meta under 700. I've been very vocal about that for the past couple of weeks. When it was down there, I was accumulating some Meta, even some swing trades as well. If it comes down again, I will not hesitate to do the same thing, as it is okay in terms of valuation for a forward price to earnings and a forward peg ratio. And if Meta just blasts off to the all-time highs, guys, well, don't say we didn't warn you, right? The monthly pattern is looking very, very solid for some expansion after a few months of consolidation, doing nothing for the entire quarter. Monthly higher lows are trying to be set right now for some possible expansion. So Meta is looking very good. I would not mind positioning a little bit for some more shares into this earnings release. And if ever it doesn't go my way, I'll be positioning for a bit more because the longer term thesis on Meta is very clear in my opinion. Moving on to Microsoft right now, even Microsoft starting to break out from this range of consolidation that we've been stuck in pretty much since early September, right? So Microsoft not looking too bad in terms of price action, but as we said for many other stocks, this one too has earnings this week. Take a look at the expected move right now. The expected move on Microsoft is going to be, sorry about that pop-up, going to be about 4%, right? So 4% to the downside, you're coming right back down here into the confines of support, maybe even lower, right? Under 500. And if you break up to the upside 4% or higher, well, you're going right back to the highs of the last earnings cycle. Is Microsoft a decent buy up here? I've been pretty vocal on this the entire past quarter, right? My answer is no. It's trading relatively rich to its sector peers and in relation to the whole market. It has great revenue and great EPS. Microsoft is one of my favorite companies in my portfolio, but there was a time to buy Microsoft during consolidation when it was under, a 30 forward price to earnings. And then there's other times where you kind of just got to hold off or just nibble ever so slightly. If Microsoft is something up here, it is a tiny nibble. It's definitely not a full send purchase. Moving on to Netflix right now. Netflix down 1.7% on the Friday. Look at this weekly candle close. Very bearish candle close. These short-term bears are in control of the chart. That's a daily downtrend. Equal highs into lower lows. Daily downtrend flushing both supports at the same time. This one and this one, 1150 down about 1110 was that final destination of support below the 200-day EMA as well. That hasn't happened that often, guys, in the context of the past 2 years. Last time that happened was back here in October of 2023. We grazed it during the tariff sell-off, and now it's doing it again. So that being said, weekly timeframes here, weekly in a downtrend, and as a result, you should zoom out to the monthly timeframes, guys, and understand what's going on. We are in the midst of some very healthy monthly consolidation. When these names come to their monthly 12 EMAs in the context of bull markets, that is when I really start buying a little bit more aggressively. So I've been a fan of Netflix. I've been saying it for the last 3 months, from up here, down to here, and now down to here. My favorite buys for Netflix for some longer term shares, 1,100 where we are now, down to about $1,000. If I can keep picking this pocket apart and buying some longer term shares, I definitely will, because now the valuation is a little bit more manageable as we measured after their earnings. Now it's literally almost a full 10% lower, right? So take 10% off these numbers, and now you're trading at a more manageable valuation, especially in relation to where we were earlier this year. Moving on to NVIDIA right now. NVIDIA, 2.25% to the upside, and we were commenting that NVIDIA was possibly a very nice breakout trade. The daily wasn't so good, but the weekly time frame held the keys, right? Nice weekly uptrend, looking for the weekly higher lows and looking for some expansion. If you're looking for some NVIDIA catalysts this week, look no further than big tech. Take note, right, of what they're going to say for CapEx. I think all these companies are going to reiterate CapEx for the end of the year, and they might give guidance for 2026 CapEx as well. If that CapEx is strong, NVIDIA is probably going to like it a lot. That being said, new daily uptrend, right? Equal lows and now higher highs. Daily uptrend, which means that weekly consolidation might just be finished, might just be looking for the ever so elusive expansion beyond psychological $200. So NVIDIA is looking very good right now. It is a greedy long because we haven't consolidated that much, right? But it is a long that does make sense, especially considering the fact that right now, around the 170, 180 mark, you're not trading for that rich in terms of a forward peg multiple. Moving on to Tesla right now. Tesla down 3.4%. Tesla's just been all over the place in the past month worth of action. They had their earnings last week, which we did cover on the channel. The valuation right now is, well, I mean, if you're talking about the short-term catalysts of the car business, the valuation is very, very high. If you're focused on the long-term positives, you can somewhat justify these numbers because of the different verticals that Tesla is trying to attack, of course, right? Is it a buy up here for me? Well, that depends, right? That depends. Well, for me, I still have some Tesla shares in the long term. I'm not adding to them because I got them way back in the day and I got a fantastic price. If I was looking to add to Tesla right now, I would only do so if I really believed in the long-term thesis. In terms of short-term trades, we are directionless right now. If you get a little bit more downside, though, could free up some nice short put opportunities down here, as you would just be looking for kind of a monthly back test of the prior resistance highs, which was back here, 405, down about 380, right? Decent little pocket. So on any further weakness on Tesla, come down a little bit more. We could get some nice short put opportunities down there if this is your style of play that you enjoy. Moving on to Palantir right now. Palantir still stuck in the confines of this range. Don't let my crooked lines fool you. This is indeed a very solid range of consolidation, and it's been like that since what? Like back here in September when we tried to break up into here and just couldn't push any further. So not looking terrible in terms of Palantir, but keep in mind they do have earnings in 2 Mondays from now. So not that many trading days left for Palantir. If you do start breaking out higher, resistance is obviously going to be $200 psychological number. Big range of consolidation, right? So if we're looking for a trade, you look for the breakout, the retest, and then the run. The retest area is where I would not mind trading this one. I'm not in the business of buying breakouts of ranges. Sometimes it can be successful. A lot of other times, you can end up kind of left behind in the dust. That being said, the weekly, not looking too bad, man. You could argue that this is a weekly bull flag, and I would tend to agree. They waited for the 12 EMA to catch up. The Palantir bulls have been making good work of this 12 EMA, you know, arguably for the past, what, year? So that, until it changes, right, is still kind of in motion right now. I would not be surprised if the bias still is long on Palantir, and that is in spite of very extended valuations and also very overbought monthly RSIs, right? If we wanted to take the breakout from here all the way to 200, very simple, guys. Your invalidation catalyst is down there. Stop loss goes down below there, and the take profit levels would be 200 and then 225 psychological for breakouts to the all-time highs. Next, we're going to take a look at SOFI. SOFI up 3.31% and cracking above its own range, at least trying to. Very solid close by SOFI. We were commenting on this volatile range of price action, saying that every time they send it down, decent opportunity to sell some puts down here, right? And just moving into earnings. SOFI has earnings on Tuesday. So I have a bullish lean into earnings. Am I positioning for a bullish breakout into earnings? No, I don't usually play earnings because even though a company could have good results, the stock could come down, or vice versa. It could have bad earnings and the stock moves higher. Shout out to Tesla. Moving on here, 1031, right? 10.5% expected move. So of course, short-term price action is not going to matter a lot. We will probably have to wait for SOFI earnings to get the big breakout or the big breakdown. 10.5% to the downside would send you to the bottom end of the range where we just were, in my opinion, down here close to 25. Phenomenal buying opportunity for SOFI. You would just be looking, for more weekly consolidation and a bit of monthly consolidation as well, back into the prior 2021 high ranges. And 10.5% to the upside, guys. Well, you're off to the races, right? Then your next psychological target is, of course, 30. If you smash through that, it becomes 35 and then 40 bucks. Not looking too bad, man, right? The bulls are set up nicely into the earnings. Will they be able to convert off of a bullish earnings release? We will see. Am I buying more SOFI shares up here? No, my cost basis on SOFI right now is like under $12. There was a time to buy it and the time was kind of down here. If you're new to the channel or you're new to SOFI overall and you want to know my opinion, is it a good, attractive buying opportunity? Kind of like AMD, right? You got to have a long-term thesis. I do believe that SOFI can easily become a $40 to $50 billion company. It may not do so overnight, but the long-term fundamentals are quite clear. Improvements in profitability, improvements in revenue generation, and a much wider product suite, onboarding new customers every single quarter. CEO is doing a fantastic job with the business, in my opinion. And don't forget, he has a big compensation package up here at $40. So they'll do what it takes to get up there. That's probably a price target for me into 2026. It would be $40, right? Moving into Uber right now. Uber down about 0.57%, right? They're trying their best to break out right here. Uber not with earnings for another 2 weeks, so we'll see what happens. Big daily downtrend, daily uptrend in motion right now. We'll see what happens. Big weekly consolidation right now. The bulls never lost it, right? You can have a bullish leaning bias. Right now, there is a swing trade on Uber. I love to find these, right? Weekly consolidation in the context of a weekly uptrend into support. That's what you like to call confluence, right? You're looking for weekly higher lows. You have a clean established support range. You now have a daily uptrend and you have a clear stop loss level. So if we want to take a swing trade on Uber for here, the stop loss would be below this guy right here, 89.20. And your expansion target would be TP1 100, and then push it a little bit higher, probably like a 110 psychological level. Not terrible for a swing trade with a clean stop loss location. And fundamentally, is Uber a decent bet down here? Not too bad at all, right? At 89, when we did it after last earnings, it was about a 1.17 peg with very nice improvements across the fundamentals. And last but not least, TSM, Taiwan Semi, 1.45% to the upside, but we know the price action has been a little bit choppy on TSM recently, stemming from the China news, of course, breaching the new all-time highs, prior to earnings, sell-off from earnings, and now we're just kind of oscillating here in this big wide range. So kind of directionless right now. You're kind of hoping for the bulls to put in a new higher high to really cement the daily uptrend and really cement the capacity for them to keep pushing the weekly levels. But if that doesn't happen, right, if something happens with the Trump meeting this week, or whatever happens with big tech earnings and we get sent lower, the next location would be down here about 268 back to the 12th of May. You can clearly see that this year, not only this year, right, even in years prior, unless you get big volatility, such as, the Japanese carry trade unwind, usually the 12th of May on the weekly is a nice area to be playing off for TSM. So if it does come down there, you will find me maybe establishing some swing trade longs or maybe as well some short puts under the market, right? That being said, at 295 where we are right now, is TSM a bad buy? No, it's not a bad buy. It's not the best buy as it was down here or this entire cycle right there. But if we have a longer term time horizon, the next few years, 2, 3, 4, 5 years plus, the valuation still makes sense for long-term portfolio shares for a bit of a nibble. And that concludes all of our indexes and all of our big tech rundown. Hopefully you guys enjoyed that with some expected moves on the big tech names, of course. In my opinion, guys, tough to predict, right? I do come into this week with a bullish bias, but we know that earnings is always a casino as well. I'm expecting good numbers from all the big tech names, but we know sometimes good numbers are just not enough, right? Sometimes the expectations are just too high. Sometimes the companies have ran too much coming to their earnings, and then they just fall off, right? You guys saw Netflix last week. You guys saw TSM. TSM had beautiful earnings. Unfortunately, it's been coming down ever since. Those usually represent good opportunities. So if we get some sell downs across big tech, or maybe some of my other fan favorite names across the earnings cycle, such as, SOFI or other names that we can possibly find in this list that maybe just come down after earnings for XYZ reason that doesn't necessarily line up with the long-term fundamentals, that's where we can find anomalies. I love finding businesses that report solid earnings, but for some reason, the market just sells them down. Usually those are the best ones to possibly pick up. So those are the types of plays I'll be looking for this week after they do report. That being said, that's everything, guys. Now let's take a brief look into the biggest gainers and losers. We're going to spend 10 minutes on this and then look into my portfolio real quick. Okay, so let's start off with some of our biggest losers of the day on Friday. So Decker's Outdoor Brands coming down 15.21%, and that is in spite of having very decent earnings, 15% and a 1% beat on revenue. The reason for the big decline? The cautious commentary by management, unfortunately missing the end-of-year sales estimate for Q4, and also saying that tariffs and a cautious U.S. consumer could possibly weigh on growth in the short term. That was enough to send the company down 15.21%. Is Decker's Outdoor a decent buy down here? I do definitely think so, and especially coming down into support, roughly the lower 80s down to 70s, but it's going to be a longer-term recovery story. If you take a look at this stock, it was one of the biggest winners coming into the early part of this year, but tariffs and a tepid U.S. consumer obviously weighing down not only on this company, on ON. That one's been coming down categorically since the month of May as well. And by large and by far, guys, there's a lot of names in the market that just have not been doing well, just consumer-focused names like these, names like Lululemon, but of course Lululemon has their own problems in terms of competition and whatnot. But even some of the quick service restaurant names like Chipotle is down tremendously year to date. Cava is down tremendously year to date. Domino's Pizza, an otherwise resilient brand, is also very struggling year to date, not losing the levels, but just not expanding, right? So anything closely tied to consumer discretionary spending just has not been a good place to be in the markets over the course of this year. So these are very tough trades, right? They're predicated on a better consumer landscape into 2026. So any positions accumulated at these lower levels could bear fruit, but they're not going to do so immediately. Sentiment and the narrative is what's at play right here. It's the story. These companies are posting decent numbers, but it's the story that's killing their stock price right now. So if you can get behind a recovery of the US consumer story, then this might be the type of play that you would want to accumulate at the lower levels, as the valuation down here is starting to be quite manageable. Moving on to DraftKings. DraftKings has been very volatile. I've received a lot of interest for DraftKings commentary. So down here, guys, support range, right? 31 to lower $30 is roughly the support range. That's like 2 years worth of support. Not too bad overall. I did the valuation just recently. Oops, sorry. Just going to make this a little bit smaller here. It's massive. Revenue growth and EPS growth, very decent. Got to give it to them, right? But it's a sin stock. So a lot of the times, when they try to get approval to be licensed in certain states in the US and the approval doesn't happen, the stock price comes down. When they get lawsuits and etc., the stock price comes down. So once again, this is a story stock as well. Forward PEG ratio is not all that bad at 1.2, and you can clearly see DraftKings, it's a decent company, right, for the future, right? If you take a look at EPS, flipping positive, which is what you want to see, been a long time of negative EPS, finally flipping positive, and also revenue. Revenue is steady climbing for the next few years at $16 billion for a forward revenue of $7.5 in 2026. It's not that bad of a bet down here in the $30, but once again, it's the story. It's just negative sentiment that's been weighing down this stock more so than actual fundamentals. Talking about our next one here, Spotify. Spotify is a very solid company. We will cover them when they have their earnings in 2 weeks' time. I'll remind you what brought them down after Q3 and what's been plaguing them ever since. What's the soft revenue guidance for Q3, right? They do have very strong monthly active users growth and premium subs, but the number is kind of slowing down, arguably kind of like Netflix, right? They're achieving their total addressable market. So subscriber growth is more going like this now and less so like this. And that's also probably why the stock price has been struggling. Additionally, up here in the high 600s, you're not getting the best metrics, right? It's over a 2 peg. Price to earnings is very high. And the price to sales, although not that bad, right? Still, guys, right? When you're looking at a slowing revenue growth profile, sometimes it doesn't matter. That being said, would I mind positioning here into the next support 640 down to 612? No, for the long-term swing trades is a little bit tough on Spotify because especially a lot of the options are very expensive because it's a high share price stock, right? That being said, monthly consolidation, this looks exactly like Netflix. It literally looks exactly like Netflix, right? Let me just overlay these charts. Maybe we can find some commonality here, right? Well, Spotify has ran more, but you can clearly tell there's something going on here, right? It's the exact same monthly pattern. Look at Spotify, right? Look at this monthly here, and then look at Netflix. It's the exact same thing. Same back test of the 12 and same erosion of the monthly time frame right there. So Spotify might be suffering a bit of a similar fate. I'd be very curious to wait until earnings, possibly before positioning. If Spotify comes down after earnings, maybe into the 500s, we might be able to get a much better price down to this 12 EMA under 600, right? So pay attention to that on Spotify. Solid company. I have nothing to say about the company. Very solid business overall, but slowing of the revenue growth rate and stuff like that is possibly hindering their share price a little bit at the current time. Symbotic, strong robotics name, right? Very strong weekly push. If you get a bit more pullback, I'm going to be a big fan of selling some put options down here in the 50s, clear area of prior all-time high resistance. So we'll see. Now, it's kind of blown off the top, right? But a little bit of a head and shoulders pattern right here. If the prophecy gets fulfilled and I can find it back here, may be interesting for some short puts, but also perhaps for some swing trade longs off some big monthly consolidation. Swing trade longs for 2026 and 2027 for the expansion of the robotics narrative overall. Trade desk, guys, I'm not touching. I've been very vocal about this company at 50 bucks. I think there's better bets in the market at a 1.5 peg. The valuation isn't crazy, but there's so many other companies out there trading for a 1.5, 1.7 peg. We literally just look at NVIDIA trading for a 1.7. So Trade Desk is not my favorite bet. I mean, it has okay revenue growth, okay EPS growth, but it's being undone by a lot of the large players out there, right? You can talk about AAPL, you can talk about Amazon also really stepping on Trade Desk's feet a lot. I'll let you guys look into that a bit more, but I'm not the biggest fan of Trade Desk, unfortunately, right now. So even though it is at support, guys, I'm just not going to touch this company. I'd rather just put my bets behind Amazon for expansion of their advertising business and advertising wholesale business as well. That being said, there's many other names here on the lows, but nothing that really jumps out to me in terms of like crazy opportunities right now. But we can have a look at some of the biggest gainers of the week, or some of the biggest gainers of the day, rather. So Open Door, I mean, we've covered this one ad nauseum on the channel, right? Decent consolidation phase for the stock right now, looking for some weekly higher lows. This one is still a lottery bet, man. If you guys want a position in this one, I've been very clear. Only risk what you're willing to lose. Next profit target, of course, 14 to 16. Do they have macro tailwinds in the form of interest rate cuts and in the form of management doing a better job with the house flipping business? Yes. Is it a lottery trade? Is it a gamble? Yes. So take from that what you will, right? Iris Energy. Look at these recoveries, man. This stock went down from the top to the lows right there, 34%. From the lows to where we are right now, 30%. Extremely volatile trading right here. But what the stock did give us is a bit of a tradable bottom. Now, keep in mind, though, tradable bottom needs to be taken with a grain of salt because the bottom is just so far away right now still. We commented on this on Thursday saying, listen, they were changing up some of the short-term time frames. It went from hourly downtrend to hourly uptrend, and the time to position for some swing trade longs was arguably there. Now it's a little bit beyond because I'll just show you, right? If you want to take a position right here, where's your take profit? It logically has to be at the all-time highs. Where's your stop loss? Has to be below the daily lows. It's not a 1-to-1. Down here, it was a 2.5 to 1. Now it's a little bit late. So I understand one day being too late is crazy, but I mean, that's just the nature of swing trading these names, right? They're extremely volatile. Is Iris Energy a decent bet for a long term, right? Well, down here under 50, I was getting interested, 50 to 40 for some longer term shares. Sure. Back up here at 62, you're stretching a little bit, right? 17 billion in terms of market cap. I'm not saying that they won't be eventually a $17 billion company and that the fundamentals won't catch up. This is true, right? But, you know, we're already trading at 10 times 2027 sales. So the question I have for you guys is just how much do you want to pay, right? What's terminal value on this stock? It's a very solid business. We covered it after earnings. But what's terminal value, right? At one point, they will, they will run out of business eventually, right? It's just when is that going to be? Forward price target for like 2028, 2029. I don't know if it's going to happen. It might just happen in 2 weeks. I don't know. These stocks are super volatile. $100, not out of the question, right? So there is meat left on the bone in this trade, but it's not for everybody. You really need to have a big risk appetite and be able to sustain the volatility and be able to DCA into some shares for the long term if it does keep dropping. Same thing for NBIS. Is NBIS a decent bet down there under 100? Yes, we were talking about it, right? All the way down into the Microsoft deal area, lower 90s. This stock, same concept. From the top to the bottom, 32%. From the bottom to where we are now, 23%. Excessively volatile niche of the market right now. Perfectly backtesting the 12 EMA though. Is it a good buy for the long term? Arguably, NBIS is on the cheaper end of things, right? If I had to derive two of the cheaper bets in relation to all these, in relation to Iris Energy, NBIS, CoreWeave, and APLD, the cheapest ones in relation to revenue in the future are arguably NBIS and CoreWeave. So those would be my top two plays. In terms of efficiency, Iris Energy has the best business, but in terms of just cheapness of multiples, right, it would have to be NBIS and CoreWeave, same thing, right? But nothing's guaranteed. The bears took a chunk off this stock. Can we just move lower? Sure, of course we can move lower. And that is also something that you guys need to look out for, right? But in terms of future revenue guidance and things of that nature, you can see the price targets here, right? And you can also see the revenue targets. But a lot of this revenue for a lot of these companies, not only the neo cloud providers, but names like Oklo, SMR, a lot of the frothy elements of the market right now, they'll only be making a lot of that revenue, guys, come deep 2027 or 2028. So if you're buying these and trying to go for this thesis expansion, that's fine. If you guys are buying these for some quick call options and things of that nature, just be very careful, man. That's all I need to say, right? I don't do short-term call options anymore on the channel. You guys know it's a lot of gambling, right? Because people could have done that here and here and here and just got blown away with the volatility, and they're probably still underwater at this point, right? You're basically just gambling and crossing your fingers, which is not something that you can easily replicate when you're trading the markets, right? But something that you can easily replicate is buying high-quality companies with decent upside potential for a multi-year thesis. So NBIS, can NBIS be a 2x from here, right? $60 billion company with $10 billion of revenue in 2028? Yeah, but if you're buying it here, that's the type of thesis that you should go for, right? Rather than just how much money can I make on this one in the shortest amount of time. I know a lot of people want to do that, right? But not my style of trading at this moment. Moving on further, Coinbase, not too bad. Coinbase and Circle, special shout out to them. They'll really come back when crypto comes back, right? When Bitcoin and Ethereum go on their expansion cycles. Coinbase and Circle, decent bets. My favorite one of the two, probably Circle, just because it has the most upside in my opinion versus a bull and base case scenario for share price appreciation. Coinbase still trades a little bit rich in my opinion up here at 354. The chart's looking good for, you know, just a bit of monthly uptrend expansion right here. Circle, in my opinion, though, is arguably the better value bet when we're talking about, you know, just valuations overall. Oklo and SMR, same concept, right? These companies have no revenue at all. At least NBIS, CoreWeave, and Iris Energy, they have revenues locked in. Oklo and SMR, man, you're just basically crossing your fingers and praying at this point. So Oklo and SMR are probably not companies that I really want to touch, especially Oklo, but SMR, you can justify a bit of that. The way that I'm playing it is short puts down here with some of the volatility. And the same can be said about a lot of the critical minerals plays, right? Like MP Materials, a lot of the revenues are only 2028, 2029, 2030 type of thing, which is why a lot of them have unwound a lot recently. USAR, unable to get one of those government contracts. Arguably probably my favorite bet in the whole critical minerals niche in terms of, you know, just that whole narrative overall, right? But a lot of these names super extended on their weekly time frames. The time to position was a long time ago. Any positions up here, you're really greedy. It's a very greedy trade. So hopefully you guys are ready. If you do buy these up here to DCA on your way down, and I hope you also have a longer duration thesis because, right, a lot of people want to go for quick swing trades. Then when it goes down, you just end up being a community member. So hopefully you guys are ready to be community members on a lot of these if you're trying to pick the tops. CoreWeave, we talked about it a lot. CoreWeave, my favorite time to buy is like under 120. 120 down to 100 is my favorite range. Right now, we're kind of just playing between the time frames here. Daily downtrend, the bulls are looking to recapture. We'll see how easily they can do it, but big resistance up here, 145 down to 135. You guys know I have leap call options on CoreWeave. I still love this company for forward expansion, and I think overall that they are cheap in relation to a 2028 base and even bear case scenario for share price appreciation. So I do enjoy buying CoreWeave shares and call options with long time horizons on them to benefit from possibly some of the continuation on the upside there. Reddit has earnings this week, so tough to determine what's going to happen with them. But if they do come down here, 170 to 150, I probably will be looking to maybe do some either short puts on Reddit down here, right? Just looking for monthly higher lows, or possibly even positioning, I don't know, for some call debit spreads or things of that nature for some swing trades, but positioning here into earnings, not the biggest fan. If you ask me what my bias is, I do have a bullish bias on Reddit. The valuation here around 200 is not the worst. I think they will have good earnings, but we'll see what happens, of course, right? It can go either way, in my humble opinion. Other energy names like Constellation Energy Corporation, very solid backtest here of a prior level. Solid backtest last week, looking for possible upside continuation. Not too bad. Also, another player that I love in this niche is GE Vernova. Solid accumulation range right now, around 600. This one is nice, in my opinion, for shares that we're looking to carry into 2026, 27, 28, 29. They reported earnings last week. All of their energy turbines are sold out through 2028. Super solid company, in my opinion. If you talk about Micron is just blowing off the top right now. I mean, arguably, right, if I were to redo the valuation here at 220, it's not even that expensive, which is crazy. What is kind of expensive is the technicals right now. It's just very tough. You kind of just, is this like AMD right now? You got to buy it for the longer term thesis of expansion of the business in terms of market cap. But buying these right now at weekly overbought conditions and monthly charts that look like this, you're never going to feel like you're getting a good deal unless you have a long-term time horizon. You guys know me, right? We position on Micron calls here. I'm still holding some of my Micron positions to this day. I closed a decent portion of them at my initial take profit target of 170. I'm still holding a little bit more because I have until December 2027 for my Micron contracts, but right, I understand if it's a bit tough to position up here, guys. It's just very tough to read these charts. And if you're trading these with momentum, right, just always establish stop losses below the higher lows. You can also refer to those as trailing stops type of thing, right? That's pretty much everything, guys. I mean, we've covered a lot of these names over and over and over. And you guys know my stance on these right now, right? They're very tough to chase. You got to rely on a longer term time horizon. And a lot of the times for some short term call option plays, you got to outpace the volatility, which is not an easy thing to do, right? I'm always a fan of buying into corrections and buying into weakness and things of that nature. But, you know, a lot of people recently, you know, it's just a question of greed in the markets with a lot of these names, right? People are trying to position way too heavily with very short duration call options. And I wish you guys the best, but it's not as easy as you might think sometimes because you're buying a lot of volatility premium. And you know what happens with that after if the volatility gets crushed and the stock price gets crushed as well, your calls end up worthless, right? So I understand if a lot of guys are bullish on this one, but unfortunately the reality is for a lot of these names, you're late, right? You are very late. Like the time to position on a lot of this stuff right here was like a month or two ago. Unfortunately, for the best possible entries, it pains me to say this, right? But for the best possible entries, you're going to have to wait for an actual correction on the SPY and QQQ just to take a lot of this froth on these names out of the market. And I'm just saying froth because they've pulled forward a lot of their revenues for 2027 and 2028 already. That's what I mean by froth, right? A lot of these companies trade at the upper end of what would be considered a reasonable valuation. But if you want my opinion on these right now, we're in a phase of the bull market, guys, where the story arguably matters a lot more than the fundamentals. And whenever that starts to happen, right, you got to understand what's at play. What's at play is any larger correction. Like you can see a lot of these names. I mean, you just saw it, right? A lot of these names without even big index consolidation, they can go down 34% in the blink of an eye in like 5-6 trading days. Like, what do you guys think is going to happen if the SPY QQQ pull back like 5, 6, 7, 8% because of a big bearish narratives? A lot of these names are going to pull back like 40, 50%. You know what I mean? So you have to be ready to absorb that and kind of take the bullish goggles off, the bullish story goggles off, and kind of just, you know, just sit with reality. The reality is like, you know, the market's been very forgiving recently. It's been a very easy bull market, but usually when people start getting complacent, that's when you start getting too greedy. That's when you start making mistakes. And that's when you really, you know, just like Warren Buffett says, right? When the tide goes out, you quickly figure out who's swimming without shorts on type of thing. You know what I mean? So just be careful with these names. As I said before, I understand playing momentum and I play momentum myself, but just try when you know you're late, you got to keep the position sizes down, especially if you're just swing trading. So that's my commentary on that. And now lastly but not least, let us cover some of our trades, right? So if you take a look at my portfolio in terms of the trades we made last week, all of these trades, guys, like all of these trades, right? They're on the top 5 options list every single week. Like a lot of these trades are just top 5 option trades. You know, we found them again and again and again and again. And even the ones that I didn't trade, I'm already in. Like I'm already in Amazon. I already have an Amazon assignment. I already have an Affirm assignment as well. So taking a look at the wheel trades, we talk about these all the time. Very successful wheel trades on a lot of the top 5 options plays. Even CoreWeave was in there. I closed a lot of these on Thursday, just to prevent any volatility coming into even Iris Energy. You can see a little bit of a short put down there. These contracts can be scaled up or down, right? Depending on your account size. So these are just for one contract. So you can imagine, like, you make a lot of money just trading the wheel strategy. 0.5%, 1% a week, very strong. We also manage a lot of our assignments really well, man. I mean, if you take a look at these, we did more adjustments on our covered calls. Amazon, I stepped them up from 225.50 to 225. Take a look at my cost basis on Amazon right here. After farming covered calls for the last few weeks, my cost on Amazon is now 210. If I get called away at 225, that's like 7% in 5 weeks, well above my 0.5% minimum standard on the wheel. That being said, BITX, same concept. We got the 54 calls here. We rolled them to 53.5 calls for October 31st. That being said, we made $1.15 in credit. Look at my cost basis on BITX right now. It's 44.17. So if I get called away close to 53, 54, I'll be making like $1,000, which is just crazy in terms of premium, right? If you look at, we've been in this one since September 26th, so call it about a month, right? If I get called away at 53.5 divided by my cost, that's 21% in a month. Just writing covered calls on BITX. I mean, what is more simple than that? Affirm, same concept. We got a sign on Affirm at 68. Just about a week ago at this time, I found covered calls for this upcoming week for $4.15, right? So now if I get called away on Affirm at 68, we're at 63.37 cost on that one. That's 7.3% in just 2 weeks of being assigned this one. Arguably going to maybe be an in and out. And the same thing can be said about Sentinel One and Rocket Mortgage, just currently still farming covered calls every single week. My assignment price on Sentinel One is 17.5. Cost basis is now 16.60. So even this one, right? 17.5 divided by 16.6. It's like 5.5% in just a few weeks. Very solid, right? So these are just very boring trades. And even Rocket Mortgage, we got a sign on October the 3rd. So say we've been in it for a month at this point. We got in at 18, right? So 18 divided by 16.69. There you go, 7.8% in a month. I know it's not the most attractive returns in relation to like short-term call options, but just for farming credits in the market, we've been making a killing on a lot of our assignments. So a lot of the big money that I've been making is as a result of some assignments, right? Directional trades, we closed one XLV call option. You might remember I built those at the bottom end of the range, right? I was kind of saying it over and over and over that XLV was a nice time to accumulate. And now we're into take profit number 1. So now take profit number 1, I closed half my position. The next take profit will be all the way close to the all-time highs. Very solid. We made 70% ROI just holding these calls for a couple of months. Not too bad at all. And that being said, those were all the trades for last week. If you want to take a look at the trades that I have into this week, well, take a look at the portfolio real quick. I'll just run you guys through the positions. We've been through the assignments, so I won't cover them again. Affirm, Amazon, BITX, BYND. I got assigned some BYND shares at 2.5, 100 shares. I'll hold them for the meme. If not, I'll just farm covered calls and we'll see if we can actually get a negative cost basis on these. Covered calls are just so ridiculous. Swing trades on Duolingo and Restoration Hardware. Those are basically just feeler positions. I'm holding them, but my expectations for them aren't for anything massive, at least not for the next 2, 3, 4 months. Very small positions. You can see like not even $1,000 in these, right? Rocket Mortgage, we've been over these. Sentinel One, Resolve. This is another position that I built kind of just to play the momentum in the AI narrative. So Resolve is not a position that I built, but a position that I got assigned at $5, waiting for these pullbacks. We're assigned at 5, so we'll see if we can start farming to the upside a little bit with this move. The reason I'm not going to wait for expansion is because I already have a swing trade for expansion on resolve. Very small one down here, bull call debit spread where my mouse is. May 2026, 6 versus 11 strike bull call debit spreads. We paid 70 cents for those. They're currently down right now, but what's the upside, right? I like paying small for asymmetric bets with a big reward, right? Total profit is $5 per contract. How much did I pay? 70 cents, right? So very decent risk reward on that trade right there. If you take a look at my long options, you'll see a brand new one here. IBIT. I went with June 2027, $75 out of the money, the leap call options. Looking for the next leg of expansion on Bitcoin. Sentinel-1, sell the $20 calls for January 2027. They're still up about 15%. We'll see how they go. TLT, I've been in this one for a very long time. The trade is finally expanding right now. We'll see what happens. Visa, still have this June 2027 320 call. This is just to counterbalance an otherwise very tech-heavy portfolio. Just going in there with a bit of Visa call options to kind of balance. Then we have XLV, which I already said we took profit on one of them. Next take profit, all-time highs, but you can see that contract is still up about 86% right now. The wheel trades that I have for next week, a lot of these are covered calls, so forget about the Affirm, the Amazons, the BITXs. The actual short puts for the wheel are these, right? So you're talking about a APLD 25 short put. We got in for 30 cents, which is 1%. Contracts moving well for us. BITX, another one, October 31st, $40 puts. We got these for 69 cents, currently up 65% on those. We'll be able to add that to our tally of just farming BITX. By the way, the $1,000 in premium that I've made per contract on BITX, that's what I use to buy the call options. So I'm just funding BITX. I'm funding Bitcoin longs by farming BITX short puts and covered calls down here. BMNR, this is a brand new trade from Friday, 45 short puts for 74 cents, 75 cents when we opened it. Very greedy trade for me, okay? So this one I'm playing a bit more aggressively because I don't mind being assigned. Oscar Health, we found this one last week as well. We got the $16 puts for like 22 cents minus commission. Currently looking very good as well. All these trades, man, I've been talking to you guys about farming these levels on these companies for a long time now, so nobody should be surprised unless you're new to the channel, at which point I welcome you. The SMR as well, we took this last week when the stock got crushed. We got the $30 puts. We got them for like 28 cents, currently up a little bit. We'll see what happens. And SOFI, took this one when SOFI was down 8%, I believe on Thursday. We took a earnings trade, $20 short put, man. We got this one for like 16, 17 cents at the time minus commission. So far, so good on that small little contract on SOFI. So you can see I don't have very big contracts open other than the ones that I'm assigned so far. I have a lot of buying power, and that's by design. I wanted to take the most amount of buying power into this earnings week because you will see me playing earnings either before or after as well. On the long combination side, these are all call debit spreads. I'll run you through them. Adobe and CRM, my newest swing trades, just looking for a bit of appreciation on software. But look at the days, look at the dates here. February for CRM and for Adobe, right? So out of the money, call debit spreads, just looking for some expansion and some recovery in the software niche. AMD, leap call options, debit spreads, they're doing very well, up 83%. The total ROI potential on this one is absolutely massive, but I will have to hold it for a lot longer and burn some time over and above the $300 strike, which is the short strike. Amazon, leap call debit spreads still in motion, December 2027. Those are up 31%. CoreWeave, leap debit spreads as well. Those are still up 50% with a whole bunch of time on them. You can see these are for December 2027. We got a lot of room to play with there on CoreWeave. JP Morgan and Meta, small little swing trades. JP Morgan and Meta, small little call debit spreads. I'm just looking for expansion of the weekly timeframes here. So JP Morgan looking for this, and Meta, same concept. Meta, I'm looking for a bit longer. I'm looking for the monthly expansion here beyond the $800 levels. So that's why I structured those trades. Lastly, NVIDIA, we've held this one since last earnings. Can you believe it? Since last earnings, and we're just still about break even on this one. This one needs to come up to about $200, so I'll be watching for that. Rubrik, we've talked about this one a lot on the channel as well. This is one of my favorite cybersecurity plays. We have leap call debit spreads, and I'm just looking for the monthly appreciation cycle of this one. It could take some time, possibly, but time is what I have on these contracts. We have until January 2027 for that to happen. Very good risk to reward on this. We only paid like $1,450 for this one, and the total appreciation is like, you know, something like $6,000, right? So very strong there. With Resolve, we talked about, and lastly, SPGI, another little small call debit spread trade. We paid the $360. It's currently still around break even right now, but SPGI going for the same thing, right? Going for the recovery story of this stock after they got crushed after the FactSet disaster, right? Just looking for the bulls to kind of recapture on these longer term timeframes, push up, take us out into take profit territory, and I have until January. So you can see a lot of the smaller call debit spreads that I tend to take them with a lot of time because I'm going for either weekly or monthly expansion moves, not so much just weekly swing trading and day trading, right? So that's it for the portfolio, guys. I got a ton of buying power coming in next week. Accounts currently at a year-to-date all-time high. So everything's been moving quite well for us. And that is everything I had for you guys in today's video overall. So hopefully you guys enjoyed. If you did enjoy, consider dropping a like for the growth of the channel. Would appreciate it. Consider subscribing if you're new as well. We are very close to 10,000 subscribers, and I need your help to get me above that big milestone. Would really appreciate it if you guys hit that subscribe button, especially if you're newer to the channel. And last but not least, if you have any questions, please feel free to ask me in the comment section down below. I'm always going to be there to help you guys out. And last but not least, guys, if you wanted to, if you are tired, essentially, of trading the markets and investing in the markets alone, and you'd rather do so in the comfort of a trading and investing community, you might consider joining our trading and investing community with over 300 members. We have a lot of fun in there, and we also do make a decent amount of money in the process. In terms of what you get access to all of my trades in real time. We do a lot of wheel trades, but we also do a whole bunch of other trades, as I showed you guys in the portfolio, right? We do call debit spread swing trades, credit spreads sometimes, leap call options, a lot of leap call options as well, right? So you get access to all my trades. Here are all the trades in the past few months. The green little check marks are wins. The red little circles are losses. I'm always transparent with both of those. The goal is to make the wins a lot more frequent and a lot bigger than the losses, which is something that I've been publicly doing on the channel now for the last 2 years for you guys, right? That being said, you get access to all of my trades in real time. You get access to our private morning live streams Monday through Friday, where I trade the markets live, but also take all your questions on your stocks, your options, and your long-term portfolios. It's a great place to interact with me personally if you wanted to ask me questions. And you also get access to our education section. That's where I have all my educational content that I don't put on YouTube. How I do technical analysis, fundamental analysis, how I build long-term portfolios and which companies go in there, how we build trading accounts depending on your risk tolerance, what types of strategies should you be employing, and so much more in terms of educational content there. There's over 15 hours of educational content in that section right there. Last but not least, you also can have access to our chat rooms and ask me questions all throughout the day. I'm very fast to answer. And you also get access to all my charts and all my watch lists. If you guys like how the way I do support resistance levels, you like the way I do fundamental breakdowns, and you just want to copy all of my stuff and all my watch lists that I use to trade the markets with every day, you can just, with a few clicks of a button, copy absolutely everything that I have, and they are then yours. So if you want to be part of our Discord community, the link to join us is down below in the video description. And if not, I guess I'll see you guys right back here on the channel. That's it for me. Take care. Thanks for watching. I'll see you guys tomorrow in the top 5 options video that I usually release on Sundays for the upcoming week. So take care. That's it for me. Peace.